Welcome everyone to Vested Interest. This is Shane back again for another stock pick of the day video. It is the first day of August. It's actually my daughter's birthday. Happy birthday, Shyla. She turns 11 today. She's my oldest, and my youngest turns 9 on the 3rd, August 1st and August 3rd. But that is not what you came for. Happy birthday to both of them. Anyway, we are going to cover Illinois Tool Works, ticker ITW. This is out of the industrial sector. Let's jump right into the video. So if you want to know more about this company, check them out at www.itw.com. And I always love it whenever the ticker matches up with the internet site as well as the three letters with the company ITW. It makes it easier. From a simple ad in The Economist to a global, diversified, multi-industrial manufacturing leader. Like many companies founded in the early 1900s, ITW's humble beginnings are attributed to a few individuals with a passion to invent and create something new. ITW's founders believed that unleashing people's creativity would make the company great. Generations of ITW colleagues have fostered the ITW values of integrity, simplicity, trust, respect, and shared risk, creating an environment that allows innovation to thrive. Today, this creative and entrepreneurial culture continues to fuel the company, and our people continue to embrace this legacy and lead us forward to reach our full potential to position ITW as one of the best performing, highest quality, and most respected companies in the world. So they are a tool manufacturer, fasteners, that sort of thing. Again, they've been around since the early 1900s, so well over 100 years. I thought it was kind of neat to kind of go through and see some of the older pictures, right? Here's that ad in The Economist they were talking about. Here's looks like some of their founders, early members of the company there. Not sure who this individual was, but if you do go to their home site or their homepage, you can see they kind of break these down by year. You can click on each one of these and it'll give you a brief description of where they were through the history. So I thought that was kind of neat. Again, if you want to know more about them, www.itw.com. Now, the reason we are taking a look at them today, down 4.36% on the day. We are talking about Illinois Tool Works, Inc., ticker ITW, again out of the industrial sector. Closed the day at $251.85. Looks like they're flat in the after hours. I usually look at these around 4:30 whenever I get home from work. So pretty flat, at least 4:14 there whenever I started looking at this. They have a 52-week range, a low of $180.27, a high of $264.19. So even though they were down a little over 4% today, they are still much closer to their 52-week high than they are their 52-week low. And I would love it if they pulled back close to this 180. Anything under 190, even really 200 on this one would be in the buy range for me. This is really a company that I really would love to get into, but I always feel like this one is overvalued. It's one that people really flock to for safety, and we'll see why. Very good metrics overall on this one. Average volume of 1.1 billion. Today was 1.8. So obviously a sell-off. You can see that sell-off in the morning. Looks like they leveled out and maybe even crept up a little bit towards the end of the day. Market cap of 76.538 billion. Beta of 1.14. So they are more volatile than the overall stock market. PE ratio, in my opinion, this is very high, especially for a company that is well established like this one. 25.21, $25.21. And PE stands for price to earnings ratio. So that's the price you're paying for every dollar of earnings, right? You're paying $25.21 for every dollar of their earnings, which is just high. Earnings per share is very nice. EPS is $9.99 per share. So for every a dollar they earn, you're paying $9.99 or returning $9.99. So that's very nice to see. Earnings date August 1st. So that is probably why they are down today. There must have been something going on with their earnings. You want to look at that news there. Forward dividend, $5.24 paid out in the year. They are a quarterly payer. We will see that here in a little bit. Yield is down on this one, 1.99, under 2%. I really like to be above 2% unless it's a really fast grower. We'll see if this one's growing here in a little bit. But obviously, if it pulled back to this 180, again, for me, anything under 200 would be one to look at for this one. It would be well above 2%, put them probably in that 2.5, 2.6 range if they pulled back significantly. Ex-dividend date was June 29th. Looks like they're going to pay out, or they did pay out July 13th, so they should have another ex-dividend date coming up. So if you were to buy them now, you would be in line for their next dividend since they paid out July 13th. And a one-year target estimate, at least according to Yahoo Finance, where I pulled this information from. I am not affiliated, just one of the sites I like to go to. They say $241.94. So they see it continuing to decrease here, right? So Look for more of a pullback on this one. I'd throw it on the watch list. It's on my watch list. I definitely like the company, just not the valuation currently. But let's look and see if it makes sense. So I like to look under statistics at dividend yield theory, and what that means is we go over the 5-year average, 2.32. We compare it to its current 1.99, or over here, forward annual dividend yield, 1.99. And since it is lower, this speaks to overvaluation. If this number was higher than their 5-year average, it would speak to some undervaluation. So at least according to dividend yield theory, this one is overvalued. It does have a low payout ratio, 51.55%. So again, for a company that's been around as long as it has, to only be in the 50% payout ratio, that's very nice to see. Free cash flow, under financials, you'll find a lot of information. You'll find their balance sheet, their income statement, what kind of debt loads they have, whether they're paying down debt or they're buying back or issuing shares. You want to look at their assets over liabilities, all that information. But one of the things you want to look at specifically for us dividend growth investors is free cash flow. We want growing free cash flow because dividends are paid out of cash flow, and we want growing dividends over time. So 2019, you can see 2.6 billion. 2020, it was 2.5, small drop there. 2021, smaller drop, or a little bigger drop there, 2.2 billion. And then 2022, 1.9. So overall, from 2019 to 2022, pretty steady decreasing free cash flow here. Not good to see there. That is not good to see, but they are repurchasing their own shares. That is nice to see, and significantly so. So part of this, as you can see, 1.5, then they dropped down, but then they increased their repurchase of shares. So that might be part of this decrease in free cash flow. As you can see, like 706 million, 1 billion, 1.7. So it looks like they're increasing their repurchase of their own shares. So that might be part of the reason the free cash flow is lower each year. And if that is the case, I don't mind that at all. If they're using their free cash flow to buy back their own stock, that helps you as an investor. Now, I always recommend more than one source. So another one that I like is stockanalysis.com. You can pick whatever sources you like. Just make sure you're looking at 2 to 3 so you can back check the information that you're getting is accurate. And according to the 14 stock analysts that have taken a look at this, they call it a consensus hold. I would tend to agree. I would actually, at this 251, right at the top of their 52-week range, I would actually call this a sell. I would be selling this one. I feel it's overvalued where it's at. But they call it a hold, so that's just as good as a sell. I wouldn't be buying any more of it if you currently own it, and I wouldn't be looking to get into it if you don't own it. That's just me. I am not. It does have very good numbers. We're going to continue to look at them. Again, you'll find the same information under financials here on stockanalysis.com. They just present it in a little different way, and they go back further than Yahoo Finance does. So if you want to look back further than just 2019, this one does go back further to their income statement, their balance sheet, their cash flow, all that information. Under statistics, I like to look at return on equity, return on invested capital. I like 10% or better on both of them. And return on equity for this one is 98.1%. I think that may be the highest I've ever seen. 98.1%. That is really, really high. They are doing a very good job at investing their own money back into themselves, whatever it's for, buying back shares, making acquisitions, paying down debt. They're doing a very good job. And their return on invested capital, same thing, 33.7%. Very, very nice numbers here overall. Let's take a look at the dividends. And again, payout ratios in the 50% range, 52.45. I think Yahoo Finance had it at 51 and some change. I'm not going to, squabble over 1% difference. So in the 50s, under 55% payout ratio with nice dividend growth, 7.38%. So very nice to see a company that has been paying a dividend as long as they have. This is a dividend aristocrat, I believe. Paying dividends as long as they have, still with a 7.38% dividend growth. I went back to 2020, $1.07 in June 29, 2020. Looks like they raised it September 2020 to 114, raised it again September 2021 to $1.22. I'll bet they raised it again in September of 2022 to $1.31, and I would be willing to bet they're going to continue that raise again this September. So look for that if you are a dividend or a holder of this stock, that they will probably have another raise come September. Overall, very, very nice numbers. The only thing I don't like on this one is the valuation. I would look for more of a pullback on this one. Again, I'm interested under 200, but it needs to pull back significantly for me to jump on this one. Really love the company, just don't like the price of the shares right now. This is the vested interest stock screener. You can pause here and go through this. This is how I set up the videos. This is also how I look at a company on a high level to see if I'm interested in adding it to my portfolio. If it already exists, it's how I look to see if I want to continue to add to my position, and if it still meets my criteria, or if I need to trim it out of my positions. That is really it. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community, building a community of like-minded dividend growth investors so we can share our experiences, stocks like this that we are watching or buying. And let me know what you think of Illinois Tool Works down in the comment section below. Are you a shareholder? Have you been watching it for a while? Is it one you're interested in buying, or have you even heard of the company? It may not be one that's even on your radar. Let me know down in the comment section below. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So if you have a stock like Illinois Tool Works you would like me to add to the list to do a video on here in the future, go ahead and drop that down below as well, and I will work it into the rotation. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion in investing journey for educational and entertainment purposes. Investing involves risk. You can't money to never invest any amount not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice counsel of a certified financial advisor.